Have you been wondering if it's a good time to refinance your home? Have you been inundated with spam and telemarketing about these crazy low interest rates? Well, today we're talking about the steps to refinance your home, and we are starting right now. Hey y'all, welcome back. It's Debbie Dobbins, real estate entrepreneur here in Wichita Falls, Texas. My phone has been ringing off the hook nonstop with these unprecedented interest rates. Not a day goes by that someone doesn't ask me, what do you need to do to refinance my home? Should I refinance my home? How long does it take to refinance my home? So today I'm going to share the refinance process step by step so that you can decide once and for all if you should jump on that refinance wave. First things first, before you even start looking at lenders, you need to know what your current balance and interest rate are. You got to know if you're going to save any money, right? It's actually a super simple thing to figure out. Want to know? Just pull out your current mortgage statement. I'll wait. Put it on pause. Go get it. You're back? Okay. Your next step after you see what your balance and your interest rate are is to get a general idea of how much money you might save. All too often, I have people say, I'm going to save hundreds of dollars because that interest rate is so great. Well, and it's a quarter point less than what you're paying. So actually, you might save thousands of dollars over years, depending on how long you want to live there. But here's the deal, is if you're only lowering it a little bit and you're going to move in 2 years, it's probably not going to be a really great deal. So here's a method to determine how much money you will save on your payment. Because actually, that's what everyone wants to know, is what is the amount that I'm going to save on my monthly payment. It's not a magic formula, but it's extremely effective. So here it is. If you lower your interest rate 2%, for instance, from 6% to 4%, you will save 1% of whatever your current payment is. It's really simple. Here's an example. If your payment is $400 a month and you lower your interest rate 2%, your payment goes down approximately $40 a month. Same thing for $1,000 a month payment. It goes down $100. It's very simple to see. If you're lowering your interest rate 1%, it only goes down 0.5%. So using that same example, it would go down $20. This is not an exact math problem, but it is super close, and it's based on a 30-year loan. And if you're reducing the length of your loan, say from 30 to 15, or you're taking cash out as part of that transaction, this is not what you would use. But most importantly, it gives you an idea how much you could be saving, because then the next thing that's very, very important is to know how long you plan to live there. If you're not going to be in your house very long, saving $50 a month, if closing costs are $5,000, is probably not the best thing you could do for yourself. So that being said, let's move on. Now, after you've determined that you will be reducing your payment enough to make you happy, you need to determine if you are eligible. When you bought your house, if you have a mortgage and you're refinancing, when you bought your house, you went through a mortgage loan approval process. Guess what? You get to do that all again. For those of you that don't want to relive that experience, refinancing is not going to be for you. It's really not that hard, but some people have bad memories because they had bad people that helped them. The exception is if you have an FHA or a VA loan, you usually can do a little bit less work. It's called a streamline, and you do need to not completely requalify, but your credit scores are still going to come into play, and paying your home on time is going to come into play. So keep in mind that your interest rate is dependent on your credit score. Always. The better your score, the better your rate. So moving along, you will once again have to qualify for a loan. It's just like when you bought the house. And to refresh your memory of qualifying for a loan, you have to have sufficient income to support your debt and your credit scores that are at least over 640. If you don't know what your credit scores are, you can check out this video qualifying for a loan, know your scores. And once you know what your income is and your scores are, it's time to figure out all your debts. Those debts include your mortgage payment, your car payment, or payments, and all other monthly credit card installment loans, child and spousal support, and yes, those student loans. So a lot of people get tricked up because they think they're not paying on their student loans and they actually count as debt. Now, not to get overly complicated, that was a lot of information. You take your total debts, you just added up, and your housing, and you divide it by your gross income. If you don't know what that is, look at your pay stub. And if it's under 44% and your scores are 640 or above, you qualify 99.9% of the time. Easy peasy. And that's really the hardest part at that juncture. Now, if you don't meet that criteria, don't worry, you can still qualify, just in a different way. You can check out my video called How Can I Qualify with Less Than Perfect Credit? But let's move on. So now that you know you can qualify, it's time to find a lender. These days, most lenders have very similar rates. So it's not about rate shopping anymore because that all happened in 2008 when the lovely government started regulating loans. And so it really depends more on how you resonate with the loan officer because during this process, there are lots of people involved. Underwriters, loan processors, appraisers, surveyors. Everybody has their hand out in a mortgage transaction. And all of them should be managed by your loan officer. So you want to find a loan officer who does great follow-up, explains the process, and you actually like. The next steps are what most people say is the most challenging when getting a home loan. Although it's just because most people don't know where their documents are. You may recall having to gather up your documents, which basically include, so you can start doing that now, 30 days of pay stubs, 2 months of all your bank statements, W-2s for the past 2 years, and your ID. If someone asks you for more than that, it's probably overkill since all loans get approved the same way no matter where you end up. Fannie Mae, Freddie Mac, VA, and FHA all have the same guidelines. It doesn't matter if you go to a local credit union, a national bank, or a mortgage broker. Once you have this paperwork together, your loan officer can simply run what is called automated underwriting. And voila, whabam, an automated approval spits out. And the only thing left to do is order an appraisal, lock in your loan, sit back, and wait for closing. So, if you'd like to learn more about living in Wichita Falls, Texas, about real estate, or anything financial, please subscribe to my YouTube channel by clicking the bell below, and we will keep you updated every week with events, interviews, and real estate information. So, y'all come back now, you hear?